Welcome everybody. My name is Robert Hegedus. I'm one of the founders and MDs of Fiedler Capital. I'm here today to talk to you about investments in Europe and the US from an Eastern European startup perspective. So first of all, let me add a little bit on what already was said. Who are we? We are a pan-CE and Baltics VC, so we invest into early stage and seed stage startups in Eastern Europe. We cover pretty much the whole region from the Baltics down to Bulgaria, and we are actually in the process of actively developing our portfolio at the moment. I'm not going to talk about myself. Just before you ask, okay, wait a minute, what is this guy? Why is this guy here, and why he wants to talk about us, talk about the US to us? Actually, we have a very diverse team. So we have first-hand experience about the US, and this presentation was put together with my US colleague. So I'm going to talk about the whole topic from an Eastern European startup perspective. So if you're a founder, entrepreneur, or thinking about becoming one, and you haven't reached Series A stage yet, then it's probably the most relevant for you. I'm going to look into three questions. I'm going to look into, first of all, why and when should you think about going to the US? And why not? Because in many cases, I think you just have to accept the reality that the US is not necessarily for you. So if you don't go to the US, then what's the alternative route? That's the second question I'm going to look into. And the third question is, what are top mistakes that you can make and that you should avoid? Okay, so let's start with the typical startup journey from Eastern Europe. It's very simple, actually. It all starts with an MVP. So you develop, a website, product, whatever your particular vertical is. You have your MVP. You develop a pitch deck, looking nice and shiny, and you start talking to people. They all give you very positive feedback. So you get encouraged, hop on a plane, go to the Bay Area. You go to all these meetups, you meet a lot of people, then there's an editor of TechCrunch, and he features you of TechCrunch. Huh? And then suddenly your life's changing, because you start to see traffic, and overnight suddenly everybody loves you. Then investors start to come, and Peter Thiel, or one of the main guys, becomes your lead investor, and boom, your life is changed. As simple as that. Now, it's a joke, of course, but the thing is that I hear from time to time this story or this idea, not only from entrepreneurs, but even from some investors from the community. But the reality is actually that this is not going to happen. And although the whole industry is very much driven by black swans and outliers, I think we could all close basically shop if we were waiting for that to happen. So my first question is always, why should you think about going to the US? Why is it so attractive? And because I'm a VC guy and I always like to talk about numbers, I always look into numbers first. So if you look into the size of the market, then it's a staggering difference between the US and Europe. So you see here the cumulated VC investments over the last 3 years. And what you see is that the US is just like pure absolute size, in terms of pure absolute size, 5 to 6 times bigger than Europe. And what you see on the right-hand side is our target region. So it's CEE, including the Baltics. And actually, it's nothing, basically. Let's be honest. If we would all be eliminated from the map, no one would ever really realize it. It also turns out that US investors like to invest more on a per deal basis, and they do that actually consistently across all stages. So these numbers are 10-year average numbers, which were published by the Wall Street Journal. So actually, the latest numbers, I think, look a little bit different. There's a bit smaller gap, especially towards the later stages. But the fact is that you tend to get much higher tickets in the US across all the stages. And of course, for a startup founder, this is very compelling. And because we are all very ambitious, and we all want to become unicorns at some day, if you look at that landscape, then the picture is shocking. So unicorns, I guess you all know this concept. These are VC-backed companies that have a valuation of $1 billion or higher. They really like being in the US. So there was this study not so long ago where the Forbes counted 65 unicorns globally, and 46 of that, so 70% is in the US, and it turns out that Europe has 3. Which is quite shocking, and it actually also makes me think whether I'm in the right space. But that's the reality, okay? So if that all is true, then why would you not want to go? The answer is very simple, because it's very damn difficult. It's actually to go there from Eastern Europe and say, hey, I'm here. I'd like to pitch and fundraise. It's actually almost impossible. First of all, you need networks. You need to understand how the VCs think there, how the investors, the entrepreneurial scene works, and what the dynamic is. So if you go there, for example, say, I would like to raise 200 to 300K in an equity round, at best, they will laugh at you. But they don't understand what you're talking about. So I was talking to this team recently, which just came out lately from one of the top-notch accelerators. There's an Eastern European team. They are raising $600,000 with a cap of 4 million. And half of the money is already in the bank. And it turns out they have 8 customers in open beta, but actually they have no proof of concept yet whatsoever. So this would never work in Europe. It's really, really different. You also, this is a more pragmatic issue, but it's an issue. Tackling immigration, getting a visa, being able to stay there for longer than 3 months is extremely difficult. It's easier when you have secured investment, but then again, usually you will need to be there in able to secure investment. So it's a vicious cycle, which is very difficult to deal with. It's very expensive. So your run rate, especially if you're bootstrapping, will be very high. And yes, you also have very expensive places in Europe, like London, but it's much easier to do this sort of like off and on bootstrapping from London. So you can spend like 2 weeks there, then come back for 2 weeks, stay at a friend's place, and so on and so forth. It's very difficult to do that in the US. Competition is extremely high. So on the one hand, you're competing for investors. On the other hand, you're competing for talent. And you'll be up against an army of naturally-born hustlers. So, which can be quite frightening, I think. And then finally, coming back to the first point, in order to be noticed and to really get like investors interested, you will need to raise a very sizable round. So even if you're raising like 500K, you're still talking about an angel investment. And angels typically like to invest within a radius of, 100 miles from their home, which means they will prefer local companies. So, on the one hand, it's a huge opportunity. On the other hand, it's very difficult. So, when should you go? Are there any, conditions, circumstances under which you should go? And the answer is clearly yes. And we think there are 4 categories of startups that should definitely go to the US. So, first of all, if you get into one of these, Y Combinator, 500 startups, Techstars, you should go. That's your ticket. Your chances of raising there will increase dramatically. And even if you don't manage to raise right after the program, the network that you get is invaluable. So obviously, it's very difficult to get in. Another good way of going to the US is having a US co-founder. That makes things much easier because you can split up the responsibilities. The guy can be there the whole time, no visa issues, existing network, and so on and so forth. Two very prominent examples of that are two Hungarian US startups, Ustream and LogMeIn. So these are actually showcased on several occasions as Hungarian success stories. But actually, if you look into that, the founding team was a US-Hungarian founding team. And in both cases, the CEO and business guy was a US guy who started business development from the beginning. And the tech guy was Hungarian, so they had the tech engineering base in Hungary. Then there is a group of startups which launch, and they have a product that just inherently generates US demand. So companies like Prezi, Skype, or Base CRM from Poland, they went to the US once they had customers there. And so when you go there sort of to go after a customer, that's again a completely different story. And that's a very convincing argument for investors. And then finally, there are companies who get first very successful in Europe. TransferWise and Vinted is a good example here. So, and once you have then, scale and you grew some muscles, then you can go into the US and try to compete there. Also similar than this, I think you will see US companies coming to Europe and acquiring European competitors. So we believe if you're in any of these categories, then it's a good idea to go to the US. But otherwise, we don't think it's a good idea. So we think then if you go despite that, it's actually a waste of your and your investors' money and time and waste of resources. So what is the alternative then? And we have a very strong view on this, which is definitely a bit subjective and can be debated. But we think that the ideal model goes actually like this. So at the beginning, you have to start out in Europe, right? And starting out in Europe, what you should do is, first of all, you should bootstrap. You should bootstrap as long as you can until you really have some tangible results. You should, when you bootstrap also, you should try to launch on multiple locations. So try to go to the UK or German-speaking markets, because those are the two markets in Europe which have the grand scale that can trigger you to the next level. Yeah? So you can do this basically then either going to UK or DACH accelerator, or you can raise some money locally. Let's say you raise 150K, which gives you 9 to 12 months runway, and then you go there. Then in the stage 2, you actually have to do active business development in these markets, and that also means relocating some of the activities. So we don't believe that it's possible to do a UK market play or a German market play purely from Eastern Europe. You have to be on the ground, and you have to actually actively do the hustling. And then once you did that and you were able to raise, follow-up round there, then you can think about going to the US if you see actual demand, or going even to other geographies. So actually, I believe that we are going to see quite some companies coming out from this region and going to other developing regions such as Brazil or India or Africa. But certainly, US can also be an option. So we have looked at some examples from the past to make sure that what we're advocating is not only our brainchild. And of course, this probably all of you know. Vinted, the largest success of Lithuania so far. So in my mind, Vinted is the perfect example. What they did They did bootstrap for quite some time. They actually launched in 3 countries while they were still bootstrapping. Then, after they had traction in these countries, they raised an angel round to professionalize the company, and then used that angel round to solidify the presence in Europe. And Germany was a key market there. And after they were large enough and they were very successful, actually, then they managed to raise a huge amount of capital in 2 rounds to tackle the US. Great example. Second example is Übervu. I'm not exactly sure how to pronounce that. So that's a Romanian startup. It was started in 2008. They moved very early on to London and went through an accelerator there. And then they managed to score first a seed investment and then like a smaller Series A in London. And what they saw was that 90% of the traffic is coming from the US. So they then actually relocated, going after the customer. And then finally, they ended up being acquired by Hootsuite for 15 to 20 million. The third example is also from the Baltics. And it's I think its biggest rising star at the moment, TransferWise. So they launched in London directly, in the London Tallinn Access, and also went through an accelerator. And their game was clearly European. So they were focusing on building a very strong business in Europe, got loads of funding for that. And their business model is just such that it also got the US guys interested. So now that they are big in Europe, they can try to tackle the US market with the help of Andreessen Horowitz. And then finally, a fourth example. It's much smaller, but also interesting. It's from Greece, as we also look into that market. It's a recruiting SaaS software called Workable. So what they did was they launched from Greece, but they launched in the UK market, actually, and managed to score some early customers there, such as TransferWise or Converse Social. And then they managed to raise a Series A in London. We're working from there, relocated there. Again, lots of interest and inherent demand from the US. So then when they raised the follow-up round now, recently, from Greylock, they again moved to the US, to Boston, and now they are working from there. So these are, I think, very good examples, and this is also demonstrates very well how we think that Eastern European startups should go about getting international. Now, obviously, this is a very simplistic display. So the 3 stages actually, it's at least like a 3, but sometimes a 5 to 6 year period, and there are lots of possibilities for failure there. But this is just like a very high level presentation. Okay, so but even if you are convinced that this is the right model, there are still some mistakes that you should look out for, that you shouldn't make, and these mistakes we actually see recurring on many instances. So first of all, the first mistake is, I think, I just call it stubbornness. Yeah? So it's if you don't fall under these categories, and you're not able to accept the US is not for you, and you go there, it's just stubbornness, and I think that's a very big mistake, and it's detrimental actually to the business. The second mistake is a misconception. There are 2 misconceptions actually here. One is that you can take a business and you can validate the concept locally, and then based on local success, you can go to a UK or US investor and they will invest. Now that's not gonna happen. You really have to prove the concept there where the investors are. And then comes the second misconception where you say, okay, yeah, we'll do UK, but we'll do it from here. Again, that's not gonna work. So you have to be on the site. At least some parts of the team has to relocate. The CEO, the actual sales guys, they have to go there. At the same time, you have to make sure that you keep the tech in Central and Eastern Europe. I think one of the biggest advantages that this region has is the great and cheap tech talent, and you have to use that to the maximum extent. Another point that we see from time to time is that founders get really fixed on valuation, and I think it's a natural tendency, and there's always, you know, this game between VCs want to keep the valuation low, founders want to get a high valuation. I think there's a good rule of thumb at every stage, how the valuation should look like, and this is different in Europe, and this is different in the US. What we face on a couple of occasions that we have founders who have like completely different idea, completely out of range valuations, and in many cases these valuations are based on discussions with either like local angels, who are obviously a bit more loose on valuations, or with like investment bankers who are aiming to become local angels. So I think you should be really careful there, and because that can screw up the whole process down the line. So if you want like to raise a large amount of money because that's what your business needs, and you're able to convince investors to give you that money, you're better off raising a convertible round than setting a very high valuation at the beginning that will just screw up the whole process later on. The other side of this coin is if you give up too much equity at the beginning, then you will be diluted out by the time you get to Series A, and then it will be very difficult to convince VCs to invest because they will be worried that there will be motivational problems and so on and so forth. So choosing the wrong investor, I would not like to talk about much about this. There just has to be a good fit in terms of what you need and what the investors can provide with their expertise, with their network, and so on and so forth. And then the ultimate killer of all the startups, if they do this, is scaling up too early. So this is definitely something you shouldn't do because once you cross a line, once you think you're there and you start to build up capacities and infrastructure and you burn through all that money and the money is gone and other things don't move, it's very difficult to turn this around. So this is something where I always say you have to bootstrap. Even if you got investments, you have to bootstrap until you really reach product market fit. Exactly. So that's it. I hope this was interesting. Feel free to ask any questions now. I think it's Q&A time. And I'm also very happy to talk to anyone after the speech or just reach out to me via Twitter or email anytime that you feel like. Thanks.
Hi. So you said about trying to, in Europe, to enter German-speaking markets and UK, but what about other big markets like Poland or France? Should they be ignored, or maybe it's okay too?
Well, yes. I mean, France and Poland, they are also not small. So if you compare them to Lithuania, they are quite sizable. I think that, you know,
Asia's premier.
What is it? Yeah. So I think it's just like you just have more chance from of becoming big in UK than of becoming big in France. So why would you go to those markets actually? I mean, Poland is another example. Poland is, I think, in Poland what you have is that Poland is still, if something is successful in Poland, that's not a guarantee that's going to be successful in the UK, for example, because there's still like a difference in the level of development of the economies and of the need and the mentality of customers. So therefore, I would go to, if you like, for example, if you're in the SaaS business, go to a country which is very open for like cloud things. Yeah, in the UK is, I think, in Europe is definitely one of the most developed markets from that sense. Yeah.
Thanks.
Yeah.
But competition is also bigger in UK or US. So
Yes.
maybe it's more.
But you will always have competition, no?
But maybe in Poland it's less competition, or in, I don't know.
Where?
For example, in different web projects and so on.
Beg your pardon?
Web projects, like for example.
Yeah, you're certainly right. So but then I think it depends really on your ambition, right? So what's your ambition? So probably there is less competition, I don't know, in a certain field in Hungary. But as I said, if you're successful, if you're getting successful in Hungary, will that help you to become the 100 million euro startup? Will that help you to raise a Series A in the UK? You have to, I mean, competition is a good thing, I think. And you have to go and tackle competition. You have to succeed in that competition. That's the only way, I think. Okay? Cool. Great. So thank you very much again, and enjoy the conference. Thank you. Bye.
Thank you very much, Robert. Thank you.